Hello everyone, this is Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of February 5th. If you're ever wondering where this article is, if you're just watching this video, if you go to the website under the stocks menu, you can go to stock market analysis and trades, and this article is updated weekly. So I go through the same process each week, just basically looking at how the markets are performing and depending on that, how aggressively I want to be deploying capital. So this is the first part of the overall swing trading process, which is just assessing market conditions. That then determines whether I want to be trading in individual stocks, going long or short. And then from there, we can look for patterns or our strategies and our trade triggers. So heading into the week of February 5th, market conditions are good. There's a couple little caveats there, which we're going to discuss and look at. But overall, things still pretty good. So I am deploying capital on long swing trades. Here are the current lists I'm watching. We have the best swing trading stocks watch list for February, just high momentum stocks, and this has been my go-to list recently, especially when times, in short supply. It includes a trading method which I've included in that article, and I just wrote an article here. If you go to the blog, you'll see this one. Quick method for scanning swing trading with limited time, and it basically goes through the whole process of how you can use that list, the strategy to use. We keep the list short, 20 to 30 stocks, so it doesn't take long to go through. You can monitor that list over like a 2-week period, just watching for trading opportunities. Really good. So you can check out that article. I'll post it in the notes to the video. Current stock watch list. That's actual setups that are forming. That's more chart pattern based. Maybe I should call it a chart pattern type watch list. And then, we have some other lists that you can check out too for some additional trading ideas. So let's get into how the markets are doing. We look at several different indexes. So up here we have the NASDAQ 100, the NYSE Composite, the Russell 2000, and the S&P 500. Each one of these looks at a little bit different segment of the market. NYSE Composite, a very broad-based index in that it includes stocks of all different sizes and from all different industries. Russell 2000, more the small cap stocks. The NASDAQ 100 and the S&P 500, more large cap stocks. The NASDAQ 100, a little bit more technology-based. We also have the Canadian index on here, and then we'll talk briefly about gold and Bitcoin. So the NASDAQ 100, it's in an uptrend. We're making higher swing highs, higher swing lows. The NYSE, same thing. A little bit of a double dip below there, below this prior swing low, but ultimately we've moved to new highs, uptrend. S&P 500 an uptrend, big strong move on Friday. The only one that's not doing as well is the small cap Russell 2000 index. You can see peaked back here early in the year and has been on a bit of a slide. So it did make a slightly higher swing high relative to that one, but overall we could say that this one's in a pullback and has not recovered like the other indices. So just a bit of a divergence letting us know, hey, lots of stocks are doing pretty good, but some aren't. Same with the TSX Composite in Canada, overall uptrend, a little bit more subdued. You can see it's kind of flattening out here, but still overall uptrend. Bitcoin, briefly, still in an overall uptrend. I've made this now a 1-week chart, so this is covering quite a span just to show this overall up move that we've been witnessing. And this was a 21% pullback from this little peak here down to this low. During bull markets, the average pullback is about 27%. So really, when we're in that range, it's just kind of a typical pullback. That's nothing we don't have to think about. These were all about 21, 22% pullback. So this is just kind of a common thing in Bitcoin. So still an overall uptrend. The gold miners and gold. So gold I've been talking about recently, just not as it's an imminent trade, but it is kind of at an interesting long-term position in that we're hanging out near multi-years highs. This is a 2-week chart going back to 2019, so almost 5 years on this chart, and we can see we've bumped up against this area quite a bit. This is the gold ETF, And yeah, we're just kind of consolidating near these highs. So maybe we break out, maybe we keep chopping for another year. I don't know. But if we start to get that breakout in gold, could be a multi-year run. The one thing to look at, though, is that often we'll see gold stocks acting very well, even sometimes prior to gold doing very well. And we're not seeing that. We're actually seeing the gold miners in a bit of a decline where, gold's kind of held up okay. So we can see here 2023, gold down here, the bottom one, rallied all the way back to its highs, had a pullback, and now we're back at the highs. Whereas gold stocks made much lower lows, bounced, and they've been very hesitant to even recover back up to prior levels, let alone the all-time highs like gold. So who knows, maybe gold keeps chopping around a little bit, or maybe it breaks higher and then the gold stocks end up following. But an interesting position in gold, just worth something keeping an eye on. But if it starts performing well, and I trade the stocks, I don't trade gold itself, so if we start seeing lots of gold stocks popping up on the scan list, well, then we'll start trading them. But until that starts happening, no reason to really start thinking about it yet. But just keeping an eye on it. So yeah, that was basically the breakdown for the price indices. Let's look at the S&P 500. I'm going to pull up the live chart in just a second, but let's go through the indicators real quick. So this is the S&P 500 index, just the price chart over the last couple of years. This first indicator is how many stocks are above their 50-day moving average. The orange one is S&P 500 stocks. The turquoise one is all U.S. stocks. So you can see 65% of the S&P 500 above its 50-day moving average. 53% of all U.S. stocks are above their 50-day moving average. So it's getting close to that threshold of where I like to back off, because I want to be trading stocks when most stocks are in uptrends. And the 50-day is just a very crude measure of stocks in uptrends. So right now we're kind of drifting toward that point of where I take a break, but we're not quite there yet. I talk about this quite often. This analysis is not... I'm just looking at current conditions, and that helps me decide what to do. It is not so much about prediction and saying, well, we could drop below, or we might bounce off of this level or something. It's just I trade based on current conditions. But we are going to look at this a little bit more in depth because there is something going on there. Volume, not important to me at the moment. This is the rate of change of the S&P 500 on a daily basis, so just the daily percentage movement of the S&P 500. And uptrends are characterized by lower volatility. I put this upper band in here. It's not as important as this bottom band, where you can see this was coming out of the 2000 bottom where we had the bigger decline, and you can see lots of volatility. We're hitting this minus 2% on a day where we had a 2% drop in the S&P pretty often. If we went back further, we'd see lots of them in 2022. And then throughout this market, even during this pullback in mid-2023, look at the volatility. Very small compared to what we were seeing prior. This is more typical of uptrending behavior. A little bit bigger sell-off the other day, but ultimately we recovered quickly. Wasn't more than 2%. So ultimately this is indicating we're in overall good market conditions. When we start to get those big single-day drops, that shows lots of selling coming into the market. That's usually a sign to at least back off, see what happens for a few days. Don't take some trades when you get those 2% down days. Just take a bit of time off. This is the NYSE Advanced Decline line. You can't see it over here just because I've zoomed in on the most very recent action. Overall, moving up with the S&P 500. That's a good sign. Did not follow through on Friday. You can see it's kind of flat and actually dropping a bit, whereas the index shot up. And we'll talk about this a little bit in a moment, but okay, let's talk about it now. We are seeing some evidence that the market's being driven by a few very big stocks. We had Meta up huge on late in the week. Nvidia very strong recently, like huge companies having big runs, and those are kind of pulling the index up. but we're starting to see a lot of stocks deteriorating. So we can kind of see this in the number of stocks above their 50-day moving average. It's actually been declining since the start of the year while the S&P's gone up. So indices getting dragged up by these big companies which are doing well, but that's not always indicative of what sort of the average is doing. And that's why we do this analysis. We don't just look at the index, we also look at these what we call breadth indicators to see how is, kind of the average stock that you might be in doing. And this is the upside volume and divided by total volume. Nothing important at the moment. We're looking for extreme values where most of the volume that occurred in the day occurred in stocks that moved to the upside or to the downside. So we want like 90% levels, either 90% volume to the upside or 90% of the volume was to the downside, stocks moving down. Nothing going on there recently. So let's quickly zoom in here. And this doesn't occur too often. Usually this 50-day moving average, I call it kind of coincidental. You can see here, like it's moving up with the indices, and then, in this case, it pretty much starts dropping when the indices start dropping. And that happens most of the time, but you'll occasionally see little things like this where, it doesn't quite confirm. And this is what we call a divergence. And we can see a pretty strong divergence here where just fewer and fewer stocks are holding above that 50-day moving average. So just not too many examples of this. So it's kind of a bit of a rarer thing. And like if we just go through, I don't go too far back in time. It's more just, if it's not really moving up when the indices are moving up. Here, a bit of a, you can see it kind of dropping off. We moved up a little bit, but then had a bigger decline following. So we don't know how much of a decline it's going to be, but it just lets us know. There was a big one in right before the COVID decline of 2020. Of course, COVID and the pandemic, a very different scenario, really startled the market. But even before that decline, we had a pretty strong warning sign there that, hey, like a lot of stocks are not confirming this move up, even if we didn't know that big decline was coming. We were dropping a lot and getting well below that 50% level on most US stocks before that even happened. So that pretty much helped us stay out of that. We're in that similar situation here where, we're at an okay level, but we're getting very close to that 50% level. And we have this pretty strong divergence. So what does this say? If I am going to I'm going to deploy capital. If there's a strong stock right now, I'm going to take the signal because the signals are still good, but we're seeing a couple cracks. And basically I have rules for handling that. And that's just going to mean I'm going to trail my stop loss. Whereas in really good market conditions, I'm going to try to hold that thing and maximize my gains, hit my target. I'm going to be less aggressive with the trailing stop losses and stuff. Right now, if I take a long trade and it starts to, not act well, maybe I just take my profit off the table because this is getting pretty close to conditions where I'm not going to take trades anyway. And then, of course, there's always the choice. You can take the trades and just let them hit your stop loss or target, because there are going to be some stocks that continue to do well, even if the indices decline a little bit. So you have to come up with your own rules for how you're going to handle those situations, and I do it kind of on a case-by-case basis. If a stock's really strong, maybe I do keep holding it, and if it's been a little bit more meandering up, but I still like the setup, maybe I'll use a trailing stop loss. So come up with those rules for yourself for how you're going to handle situations like this. So we're still good, but just a couple things to keep an eye on there. Another thing we look at is how have setups been working. I guess it depends on what stocks you're in, but for the most part, the things I've been watching have been acting pretty well. And so overall, that's encouraging for performance. If what I'm doing is working, I tend to, keep doing it until I start to see things not working as well, and then I just back off. Sectors on the move. Technology, communication services, financials, healthcare. Energy had a strong week last week, but it's still pretty weak over the last month, and the weakest performer over the last 3 months. So communication services up there on all 3 time frames. Technology doing pretty good on all these 3 time frames. Healthcare was up a little bit last week, but not as much as some of the others. But we can see it top in the 1 month, kind of middle of the pack on the 3 month, decent performance. And financials, up near the top in the last week, up near the top on the 1 month, and up near the top on the 3 months. So those are just some sectors that have been performing pretty well. Why would you need this? Just if you wanted to, if you're scanning through tons of stocks and you just don't have enough time, maybe you focus your attention in on some of the stocks or some of the sectors that are performing well. So I am deploying capital on long swing trades. A little bit of caution at the moment, I would say, just because of those. We're starting to see a bit of a divergence on some of those indicators. That does not mean we're going to have a big correction. It could be, a couple percent, or we might not even get it because those indicators could just start moving with the price of the indices. So that's why I kind of go through that explanation that conditions are still good, but maybe have some rules for if things start to turn really weak. Do you get out? Do you hold till your stop loss? Make those decisions. Also, can day trade, swing trading. If we were to see a decline in the indices and the market health indicators turn negative, we might be taking some time off from swing trading, or might flip to looking at some short trades. But I also like to day trade as well because it kind of helps balance the cash flow. Day trading can pretty much be done every day. Usually some opportunities out there. So kind of creates that more steady cash flow, whereas swing trading is more, you hammer it for a little while, then we take some time off. Then we hammer it for a little while, then we take some time off. Passive investing, also a good thing to do, or some active investing, looking at the long-term investments, some potential ones to look at on these lists, the buy the dip stock list, buy and hold, best long-term dividend stocks. Those are more the investing side. So that is your market outlook for the week of February 5th. Have a great week out there.